we are asking the two methods. One is called net asset method, next is called yield method, ignore taxation, value as per net asset method, value as per the yield method, the value comes 312. What is capital employed? Total asset minus total liability. We have to take a book value or market value. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College at Temple of Excellence, MYSURU. In this session, I am going to have Corporating Accounting, third semester, Unit 4, Session 2, in favor of valuation of share. In the last session, I already give the detail of what's valuation of share and how to solve the problem. And this is very, very important from the examination point of view because one problem you are going to read. So what I am going to do this day, please listen properly. Definitely it will help you from the examination point of view. We'll move on to problem now. Problem 2, following is the balance sheet. So this is called the book value. The goodwill of the company value, new values here. These are all the net debt are 6,000. These are all the new values. The net profit the company 1,60,000, 1,80,000, 2,12,000. Every year 20% profit was transferred to general reserve, a return of 10%. So we are asking the two method. One is called net asset method. Next is called yield method, ignore taxation, then fair. What is net asset mean? Under the net asset method, total asset minus total liability, total capital employed, minus preference share capital, capital employed for equity shareholder divided by number of equity share. How it will be? Total asset minus them. Total asset means either the book value or the market value will take. If the market value is given, you have to, it may be more or less that market value to take, unless whatever given in the balance sheet is called book value, you have to take it. Total asset minus total outside liability, which are the liability creditor, bills payable, bank overdraft, provision for taxation, proposed didn't. That should be deducted. Total capital employed minus preference share capital divided by number of equity share. We move on to problem now. Net asset method. Calculation of capital employed, equity shareholders, particulars, rupees, book value or market value of assets. Go with adjustment. The goodwill of the company valued 3,20,000 extra. Goodwill 3 lakh is a goodwill value 3,20,000. Then building valued 4,80,000. Then machinery valued 2,40,000 is over. Out of the total data fund found data 16,000 are bad. Come back here. This over, this over. Now patent and trademark. What is patent and trademark? 40,000. What is next one? Stock, no change. Stock, 96,000. What is next one? stock this over, debtors 1,76,000 minus back date 16,000, deduct 1,60,000. Then what is the next one? Bank balance 1,04,000. Add the figure. 3,20,000 followed by 301, 2, 3 plus 4,80,000 1, 2, 3 plus 2,40,000 1, 2, 3 plus 40,000 plus 96,000 plus 160 followed by 3, 1, 2, 3 plus 104 1, 2, 3 is equal to 14,40,000. 14,40,000 minus total liabilities which are the total liabilities are, one is creditor 2,56,000, this is one. Number two, provision 1,20,000, $3,76,000, deduct 14,40,000 minus 376 followed by 30 is 10,64,000. Total capital employed minus preference share capital. First, we have to take the total asset, either the book value or the market value. So goodwill is extra, building is a market value, machinery is a market value, patent and trademark as per the book value, stock as per the book value, debtor, this is as per the book value, bank balance as per book value. It becomes 14,40,000 minus total liability 3,76,000. It becomes 3,64,000. Total cap employed minus preference share capital nil. It becomes 10,64,000. Capital employed for equity. Then net asset method, market value is equal to net asset divided by number of equity shares. Number of equity shares. It is 10,64,000 divided by 4,000 is equal to 10,64,000 divided by 4,000, 266 per share value. 266 is the share value under net asset made. Valuation, net market value, net asset divided by number of equity share, 10,64,000 divided by 4,000 share it work out to 66. It will go in favor of net asset method. Then yield method. First, you have to calculate average profit. Calculate average profit. Total profit for 3 years. We'll move on. What's your first year profit? Amounts 1,60,000. 2009, 2020. 1,16,000, 2009, 2020. How much will become? 1,60,000. Then 1,80,000 to 2021, 2020, 2021. How much will come? 1,80,000. Then 2021, 22. It will come 2,12,000. Add 0. This is 2. Add the figure. 1,60,000 plus 1,80,000 plus 212, 2,12,000. 5,52,000 minus back date 16,000, deduct 5,36,000. It's a profit for how many years? 3 years. Average profit 5,36,000 divided by 3. 5,36,000 divided by 3. 1,78,667. 1,78,667 average profit. Now, the first step, number 1. Number 2, calculate profit to equity. Particulars rupees. Average profit as per working out 1,78,667 minus taxation. What's your average profit? 1,78,667 minus tax should be deducted. As per the problem, any taxation is there? Nil. Once again, 1,78,667 minus transfer to reserve What's the percentage? Transfer to general reserve 20%. 1,78,667 into 20 divided by 100, 35,733. 35,733 deduct 1,78,667 minus 35,733, 1,42,000 934 minus preference dividend nil. There is no preferential capital. Once again, it is 1,42,934. Your average profit is 1,78,667. There is no taxation. Transfer reserve 20% on this, 35,733, 1,42,000 minus preference dividend. Once again, profit to equity. Profit to equity, how much? 1,42,934. First, 3 years profit, 5,36,000 divided by 3, 1,78,667. So this is a profit available to equity shareholder. Next, capitalization of profit formula. Profit available divided by normal rate of return, expected return. What is profit available? 1,42,934. 1,42,934 divided by, what's your expected profit? 10%. 10 into 100. So it becomes 14,29,340. 4,20,000. That's a capitalization method. Market value of each share. Market value of each share. Capitalization profit. Capitalization divided by number of equity share. Number of equity shares. What is capitalization? 14,29,340 divided by 4,000 shares. 14,29,340 divided by 4,000 is equal to 357.33. 14,29,340 divided by 4,000 share. 1,429,340 divided by 4,000 share. 357.33. We can say 357. Then last one, fair value is equal to net asset method plus yield method divided by 2. What's the net asset method value? 266 plus 357 divided by 2. 266 plus 357 divided by 2. 311.5. Say 312. Say 300. Fair value. So value as per net asset method, value as per the yield method, the value comes 312. So total asset minus total liability, it will go. We'll move on to next problem now. Problem number 3. So this is a book value, this is a liability. Which are the liabilities are? Creditor is a liability, provision for taxation is a liability. Then come back. Net profit after for the last 3 years, 69,000, 91,500, 98,500. It is a practice of the company to keep 20% profit after taxation to the reserve. The average yield in this type of business is 15%. Important. On capital employed, the fixed assets were valued 3 lakh. This is and there is necessary to provide RBD at 10%. It's the wrong data. Compute the value each share under net asset method, yield method. We'll go to net asset method. Net asset method. I already told in the last problem, first we have to calculate capital employed. What is capital employed? Total asset minus total liability. We have to take a book value or market value. Particulars. Rupees. Book value or market value. Come back one by one. Fixed asset 1,70,000. Any change is there? Fixed assets were revalued 3 lakh. Fixed asset revalued 3 lakh. One change. So this is spec. What is the next one? Stock. See that any change? No change is there. Stock. What's the book value? Stock 3,10,000. Then what is the next one? Debtors. What's the value? Debtor 2,03,000. Necessary RBD 10%. 2,03,000 minus 10% on this. 203 into 10 divided by 100. 20,300. Deduct 2,03,000. 203 followed by 30 minus 20,300. 1,82,700. 1,82,700. Debtor over. Then bank. Bank comes 1,17,000. Cash at bank 1,17,000. 117. Any asset revalued, add the figure. This is 700. 3 lakh plus 3,10,000 plus 1,82,700 plus 117,000 909,700 0 0. This is 700. This is 9 lakh 9,700. Total assets minus total liabilities which are the liabilities are creditors, see that the balance sheet. What is the creditor figure? 1 lakh. Then income tax liability, taxation. It is 1,20,000. This is taxation provision. 2,20,000. Deduct 9,09,700 minus 220 followed by 0, 1, 2, 3, 6,89,700. Total capital employed minus preference capital see that in the balance sheet have you got the preference share capital? There is no preference share, nil. So 6,89,700 net asset market value of each share is equal to net asset divided by number of equity shares. What's your net asset? 6,89,700 divided by number of equity share 30,000. Six lakh 89,700 divided by 30,000, 22.399, say 23 rupees. This is as per net asset method. So total asset minus total capital employed minus preference share capital employed for equity share, it is called net asset, divided by number of equity share 30,000. It works out 22.99, say 33 rupees. So this goes in favor of net asset. Yield method. Total profit. How many years? Total profit for 3 years. Go with one by one. First year is equal to 69,000. Second year is equal to 91,500. Third year 98,500. So 69,000, 91,500, 98,500. Add 69,000 plus 91,500 plus 98,500 is equal to 2,59,000. Total profit. Average profit $2,59,000 divided by 3 years. 2,59,000 divided by 3. 86,333. Average profit. 86,333. This is your average profit. Next step. Number 2. Particular rupees average profit $86,333 minus taxation percentage is given in the adjustment. See that? Any tax percentage is given? No. Profit after taxation raises, the average yield is step by 15%. No. Nil. Once again is 86,333 minus transfer to reserve. What's the percentage? Here, profit after tax. It is a practice of coming to keep 20%. 20 by 100 into 86,333. 86,333 divided by 5. 17,267. Deduct 86,333 minus 17,267. 669066 minus preference dividend. There is no preference share capital. The question of preference dividend won't come. Nil. It becomes 69,666. Profit to equity. Last step. Third step. Third step. Capitalization profit divided by normal rate of return. What's your profit? 69,066 divided by, what is the expected return? 15%. Divided by 15 into 100. 69066 into 100 divided by 15. It will come 460,440 capitalized. Then market value of each share, capitalization divided by number of equity shares. What's your capitalization? 4,60,440 divided by number of shares 30,000. 460,440 divided by 30 followed by 30. 1, 2, 3. So 15.35. So this as per the web. Fair value or the profit as per net asset method. Net asset plus yield value whole divided by 2. What's your net asset method value? It is 23 plus 15.35 whole divided by 2. 23 plus 15.35 is equal to 38.35 divided by 2 is equal to 19.175. Slowly I did the two problems. Hope you understand how we are getting there. First is book value or the market value, fixed asset, total asset, minus total liability, capital employed, preference share capital is nil. Net asset divided by number of equity share, it work out 23 rupees. Then calculate the average profit, add the 3 years profit divided by 3, 86,333. Average profit minus taxation minus transfer to reserve minus premium 69,063. Then capitalization into it. Then number of capitalization divided by number of shares, fair value, net asset plus yield value divided by 2. I have solved about the two problem. Slowly I have gone through two problem, which is very important. So same method will come from the examination of value. In the next session, we'll have it one more problem. Same time, definitely it will help you from the examination point of view. So they will ask for 15 marks. Very, very simple, no complicated there. I think I have explained slowly and I have done the problem very slowly for this here. Two problems have done. Hope you understand. And you go through that problem once again. So we'll have one more session in the next class. Then we can finalize that. Thank you. Thank you very much.